G'day guys, well here we are. Sorry for the slight delay. We've got Ben Kelleher here from ANZ, and he is MD of retail and small business stuff. So he is going to share with us, but he actually just made it back. We nearly had to do a quick switcheroo of the weeks because they had a fire alarm go off in the building, and he was standing out on the street 10 minutes ago thinking he wasn't going to be able to get back in. So glad you're here, Ben, and really appreciate it.
Well, thanks for having me. Yeah, it was a bit of a rush down the stairs and a rush back up the lift. So if I'm sweating, it's because I've just gone down 31 flights of stairs.
There you go.
So good for the testing out the Achilles. Anyway, look, thanks for having me. I should just kick into it. I thought I'd give you a bit of a...
I'll get out of the way and let you just go for it, and then I will jump back in and we can do some question and answers whenever you say you're ready, eh?
Perfect. Sounds good. Good.
Go for it.
So as mentioned on the, I look after both personal banking and business banking at ANZ. And when I say business banking, it's small business. So it's not your sort of large scale commercial or institutional businesses like Spark or anything like that. It's your, your traditional dairy owners, your Sparkies, builders, and sometimes builders can extend up, depending on the size of the scale of their business, can extend up to another area of our bank. But generally speaking, the volume of businesses in New Zealand sits in my area because obviously New Zealand's has a large base of small businesses. So what I thought I'd do today was really talk you through sort of some of the stuff that I'm seeing and hearing across New Zealand. But also what I thought would be useful is not for me to talk specifically about ANZ because some of you will be with us, hopefully, and others won't be, so that's not particularly helpful for you. So what I thought would be useful is just to really get have a more general talk with you about things that I think may be helpful or insightful. And of course, if you have questions along the way, then feel free to give us a shout. And I think we'll have questions at the end anyway. So first thoughts, so just I guess generally it's a really interesting time at the moment, right? So it's I guess like yourself, we're sort of looking across the industry and going, where's it going to settle? Because if I think about the property market as a whole, it's sort of split into two areas. One is the residential property market, which some of you will be homeowners and obviously have an interest in. Obviously, some of you will be builders that will have an obvious interest in that as well. And then there's the commercial property space as well. So if we think about the residential property space at the moment, there's a few things that are really playing into that that really, I guess, make us take stock and pause a little bit as bankers and just generally thinking about the economy. One is if you think about the residential property market pre-COVID, there was a pretty well documented shortage of houses across the country, and particularly Auckland. And if you step back from that now, you do wonder whether that has changed somewhat post-COVID, and well, certainly from a short-term perspective, at least anyway, when you think about the drop-off in immigration that we're seeing at the moment, certainly the reduction in foreign students, which obviously is putting less pressure on any shortages in the apartment space, particularly. And boarding space. We've also got an obvious reduction in incomes from a lot of New Zealanders across the country, unfortunately, as a result of COVID, which then obviously puts their plans on hold or on ice for what they may have had planned around housing. And then all just generally just the confidence thing as well, the uncertainty, and people, if you listen to any economist talk, people and investors don't like uncertainty. So often uncertainty drives inaction, and inactivity obviously is not good for the economy. So as things continue to be a little bit uncertain around the world, and obviously here as well, that's going to have implications for the property market, residential and commercial. And the other side of that being commercial, what we're seeing is in the commercial property market, certainly that trend that we've had just accelerated exponentially through the COVID lockdown has been people working from home, and then just either the acceleration of plans that businesses may have had people working from home more, or just the understanding now that potentially that is a viable option for companies when they may have not considered that before. And that's more for the larger business corporates. I mean, you saw AMP, I think, in the news yesterday or the day before, announcing that they were sending some of their staff out of the central office locations and out to either satellites or working from home. And I don't think they'll be alone. So I think it'll be an interesting time in that commercial property market space, and we're interesting to see what that does to yields, and to projects that may have been on ice, waiting to kind of get the go ahead, but now probably be reinvesting or investigating those numbers to make sure they stack up in a post-COVID world. So certainly an interesting time. Having said all that, what we're seeing at the moment is really strong demand for, not so much in the commercial space, obviously, but certainly in the residential space, there is a really strong demand for home lending. What is unclear, though, is how much of that is backed up from the periods of or the weeks and months that we've had sort of inactivity through COVID, and it's basically just a catch up, and how much is actually the market still being strong and buoyed from the fact that people still want to buy and sell houses and stuff like that. So what we don't have a strong sort of feel for at this stage is it a catch up and a bit of a blip? And if you listen to economists, they kind of talk about it. Is it a V-shaped sort of, has it dropped down during COVID and bounced back up in a V shape, or actually is it a bit of a W where it's sort of went down, gone back up a little bit, but I expect it to come back down again as well, and hopefully at some point will bounce back up. So we're looking at sort of a lot of leading indicators as much as we can, and that's sort of speaking to real estate agents across the country, also linking in with various mortgage brokers as well as a wider base than just our internal base of our home lenders at ANZ. Just trying to get a feel for what's happening in the market, and importantly, what's happening in each location. And I think if I step back I think about the building industry as a whole, I think it's really important that you almost use that as a blueprint as well to make sure that you're talking with each other, and architects are talking to builders and builders are talking to planners and stuff, so that we can get a really good understanding of the forward-looking projection of where the demand is, because I think it potentially could be quite patchy. So having an understanding for your area, obviously not nationally, because that's not relevant if you're in Auckland, potentially doesn't really matter what's happening in Dunedin. So getting a really good understanding of what's happening in your particular patch, and linking in with people that potentially are further ahead of the pipe than you. So as is mentioned, that could be consents, it could be architects, it could be engineers, whatever it is, to really understand how that forward pipe looks like. And we're sort of doing that at the moment. To be fair to say, it's strong at the moment, but the forward pipe perhaps doesn't look as strong, but it's winter as well, so it's hard to know whether it's just a seasonal thing or not anyway. So that all said, that's probably not super helpful, because like you, we're all sort of wondering where the dust is going to settle, but certainly things to think about. And obviously, the more you can have your eyes wide open to potential trends in your industry, that will help you plan and be a bit more agile around, potentially the staff bases that you hold, or all the types of services that you might want to provide at the right times. So what I thought I'd do is talk to you a little bit about the property for the development market. So and explain to you a little bit how that works for us, and how, not so much for us, sorry, but more for banks as a whole. And every bank will have different appetites depending on their allocation of lending, and also just generally the approach to how they operate as a bank and where they specialise in. So some banks will have a higher risk appetite in certain types of lending, and that could be commercial lending. It could be residential lending. It could be even appetite around leaky buildings, for example. Some banks are a little bit more relaxed around that than others, and spec homes and stuff like that. So it's important, I guess, if you're thinking about liaising with the bank around certain things, around what you're trying to achieve, that you understand the appetite that your bank that you're dealing with has. And if they don't have the appetite, it doesn't mean that all banks won't have that appetite. So it's important to think, like it's not a no means no. It could be a no means no for this bank, but another bank might be willing and open to working with you on whatever the project is. And that same thing goes if your clients are dealing with that as well. So if you're a builder and your clients haven't been able to secure funding from one bank, it doesn't necessarily mean that that's the case across all the banks. So banks generally have an internal allocated maximum exposure to different types of lendings based on the percentage of their overall lending. So, and that's really, it's based, as I said earlier, it's around their risk appetite. We have seen across New Zealand, commercial property investment and development has had considerable lending growth in the recent years. And as a result of that increasing commercial property values and increased development activity, it's fair to say that some of the industry is pretty full of some of the stuff. So lending growth I guess growth in that area in commercial property has tended to outstrip some areas of other lending growth. And so the headroom, as I mentioned earlier, because they have they have these percentages that say, we're going to do this much in this area of lending, this much in this area of lending. Some banks will be up against various constraints around what they can and can't do, or can and can't lend. And so over time that rebalances, but it's just an interesting thing to be aware of. So when you're dealing with the bank, as I said, it doesn't necessarily mean the other bank will say no as well. The other thing that I think is a useful thing outside of the property development market is when you're dealing with banks, what I see is, particularly if you're dealing with customers that are dealing with banks, it's important that the builders or the architects or whoever it is, that the project managers that are liaising with these customers, they also have a kind of a useful understanding of how banks generally operate when lending to those customers. I've seen builders get into strife in the past where they've had customers that haven't perhaps been as prepared or as well, didn't have a comprehension of the process around construction, particularly in the residential construction side, around the stages and release of funds. When they get to a certain stage, the bank releases more funds and so on. And what happens is the customer either gets stuck through the process, or there's a big delay for the process, which isn't helpful for the builder themselves, and they're sort of left holding the can for a few weeks or whatever, because the customer's trying to secure the next stage of funding and it hasn't been lined up well. So the more you can work with the end client who's liaising with the bank, to ensure that they understand and you understand what the process is around that you can line everything up so that everything runs smoothly. I don't know, for a lot of experienced builders and people in this industry, that's a no-brainer, but I think we certainly still see across the industry where that has fallen down. And I think the more people can educate them around what that process is, then the better. And simply the best thing I would say to get that, if you are after that sort of that education, go to the bank's websites. I mean, ANZ has it. All the other banks will have the same thing, where it gives you a bit of a brief around what that construction and so renovation and new build process will look like if you're dealing with them. And if you have any questions, feel free to to call your individual banks, contact centers just to ask. Often, the other thing that we have seen, unfortunately, is customers may get into strife, and then they'll try and use the bank as a justification for sort of not doing the right thing by the builder as well. So it's useful for builders to understand what the process is, so that they can have a clear understanding of that, so that they don't get caught between an imaginary issue, if that's for want of a better term. The other thing that I think is useful is, if I put aside sort of the market itself, is really understanding the benefits that are available to small business owners, like builders, architects, just any small business owner. All the banks will have a range of different tools and offerings that can help you manage and run and grow your business. So if I think about ANZ as an example, and all the other banks will have similar things. They'll be different, but they'll be similar in nature. We have an offering with MYOB partnership with MYOB, just to offer a discounted rate for that. We also have links up with Xero and MYOB and other accounting software tools, so that we can pass information through to help that work more seamlessly between the business and the accounting software. We also have tools like Cashflow Coach, which is an app that can sit on your phone and help you manage your cash flow, which in the building trade is obviously a really important one. And a lot of I know builders have used Cashflow Coach. Some have found it useful, some haven't found it useful. So it's worth checking it out. It's sort of run in the background by PwC, and they've established basically a tool that helps you to forward project your cash flow. And so, there's lots of tools out there for those kind of things, but that's one that is out there at the moment and is pretty helpful. We've also got things like Smart Payroll and Expensify offerings as well, which are just different things to help manage your payroll, obviously, and your expenses. So there are a range of things that each bank will have, and it's worthwhile understanding that. Because there may be things that you go, actually, if I'd known about that, that would have been really useful. So please, you can jump on the bank's websites, go into the business section, look at the different support tools that are available to you. I think when you do, you'll probably be surprised about some of the stuff that's there. Often, customers just don't know about it. So it's worthwhile just jumping on and having a look and see what's available to you. Hopefully there's something that might pique your interest. The other thing that we have, and a lot of some of the other banks have as well, is we hold workshops for small business customers, just around helping you manage, sort of start up, manage and run and grow your business. So those workshops are really well attended. We have them throughout the country. We pause them for a while, obviously, because of what's been going on with COVID, but we're starting to look at ramping those back up again as well. So we're also thinking of putting that online as well. So for those that can't make it, and I appreciate that it's not always easy to duck away to various seminars when you're all busy working. So it's something that we're looking to record and have available to you as well. But those workshops are really valuable, and we get really good feedback from them. So look out for those as well. For those, finally, that I guess are suffering from COVID impacts, there's a range of things that are available to you. Each of the bank's websites have those down to I guess to more detail. But there's things like, if you have a like home loan, we can help you with extensions or interest only periods, or deferral payments. There's also the IRD small cash flow, a business cash flow loan, which has been really popular. We can see that through our small business base, that a lot of customers have taken that loan up right across the country. So that's there. They've just extended the date. It was till the end, or till late June. It's now till or mid-June. So now it's till the 24th of July, I understand. So they've extended that, which is great. And it really talks to this small business area, because you have to have less than 50 full-time employees, I understand. So that talks, I guess, strongly to the construction industry. particularly at the lower end. And then obviously we've also got other things within the banking industry as well, like the Business Financial Guarantee Scheme, which has loans up to $500,000 for customers that qualify. So there's lots of opportunities to avail yourself of assistance if your business is struggling or needs a little bit more help. And what I say is to all our customers, if you are needing that assistance, it's better to talk early rather than later, because often there's some things that you can put in place that will set you up for success. And it's much easier to do now than later on when it gets a little bit harder. So I don't know if that's helpful or not.
That's great. Yeah. I mean, there's a couple of questions in here, but I've got a few things that I've been thinking about earlier. Do you have what sort of numbers, percentage-wise, are you guys seeing in terms of people requesting mortgage holidays and that sort of thing? Because that gives a little bit of an indication in terms of some of the strife that might be out there. Where's that sitting at the moment?
Yeah, it's not. I haven't got the latest figures on it, but it really, you can break it down, because what we've done is we've broken it down into people that have had a reduction in income versus a
loss of job,
a complete loss of income. Which obviously is a loss of their job completely. There's a lot of people that have had the 10 to 20% reduction. And so we hear and this is an important point, we hear all the sort of the people losing their jobs and the headlines around that. But I think just as important is the large numbers of people that have had pay cuts. Because if you think about what that means, that means people generally are having to tighten the belt. And so that next project that was perhaps on the plans or the agenda for next summer or this summer coming, maybe it's now been put on ice for a few years. So I think the headline number is not super helpful, because it'll give you an indication of total income loss, but it won't give you an indication of the underlying stress that's there, because, as I said, there's more that have had those cuts.
And does the bank have data or industry data and benchmarking things that you can share with small business?
Yeah, we do. We have a team. So each bank will have different capabilities around that. So we've got a team that have a tool here where we work on more with the larger commercial customers. But what we're looking at the moment is extending that down. So we write reports for different things. We've just done. There's been a fun one we did a while ago, which was around the craft beer industry, which was well received by a lot of people. I don't know if they were necessarily workers in that industry. I think lots of people were interested in it. But there is lots of insights that I think we are getting better at as a banking industry, that we are now starting to share with customers and small business. And the other thing that I think is really useful is we have a lot of economic reports that that we sort of take for granted, but often the customers don't necessarily see that stuff. So we're just trying to get a bit better at sharing that as well. The key thing, I think, is making it useful at a local level, right? Because if you get the stats for, like, even if we said to you, this is what we're seeing in Auckland. If you're a builder in Whangaparoa, that's sort of having an amalgamated Auckland picture is not super helpful. So we're really trying to get a bit more granular.
Yeah. Cool. So there's a couple of questions here. I'll just read out. In combined discussions that all banks have been having with the government, can you tell us what is being done collectively to activate growth?
Yeah, so it's a really good question. We've been working we've had almost daily meetings with the Reserve Bank and Treasury and stuff, just trying to. It's really important for us because as the largest bank in New Zealand, we really want New Zealand to be successful, and we've got a purpose. And it may sound cheesy, but our staff can recite this, and it's really to help create a world where people and communities thrive. So we're trying to get to play our part to help New Zealanders get back up on their feet. And we've been doing that for a number of ways. We've been trying, as you've seen, we've been trying to reduce rates, and that's been really helpful. For small businesses, we've cut the merchant business fees. So we've cut a lot of, I guess, things that are just maybe what do I want to say? We've done things at the moment that I think would be in isolation, maybe small, but in totality, really helpful for businesses. So things like removing a lot of fees, lowering interest rates, reducing credit card interest rates on business cards, reducing home loan rates. We've got a ton of customers. We have called about 100,000 customers proactively in business banking customers just to check in to see how they're getting on at the moment. And just making sure that they're aware of the different relief options that are available to them. What we also want to make sure is that we check back in with them again as well, because what we do want to see is we don't want, contrary to what you may hear in the press, we actually don't want people staying on these relief options if they don't have to be on them. We want to help them if they're back up and running again. We want to help them get back to helping them pay off their home loans, for example, as fast as they can, because that's beneficial to them. We've been working really closely with the government. They have, they've been listening really well. So we had some suggestions around the business finance guarantee scheme, which we suggested back to them around why the uptake hasn't been as strong, and they listened and they relaxed some of the criteria, which enabled us to open it up wider. And I think part of the piece at the moment is we're sort of seeing with the wage subsidy there and the IRD cash flow loan there from the government. I suspect what we'll see over time is maybe a transition from government funding or government support across to bank support over time to help customers get back up and grow and restart and revive rather than sort of hold them at the moment.
Well, I guess one of my big questions is the building industry at the moment is still cranking along. Everyone's pretty bloody busy catching up. All the projects that were going are going, right? And so like you said at the start, the kind of forward look is uncertainty. We're still waiting to see, but at the moment things are going well. But my question is, what should businesses be doing now to I don't just mean prepare themselves financially. How can they be starting to work in with the banks, building that relationship? So if and when the things start, the first sign of trouble and the first project that gets delayed or the first contract that gets cancelled, they've already got processes and maybe it's funding support or whatever it might be lined up with the bank, which is particularly difficult, especially as a small business who, you probably don't have a dedicated banking manager. You're dealing with a team and maybe someone different every time.
Yeah.
What are you doing to streamline that and be prepared? Yeah,
it's a really good question. So what I would suggest for people in that instance, and I think it's a good thing to be thinking about, is to there's two things. One is to make sure you've got your house in order. So it's amazing how, and this I guess it's not amazing. I guess there's all sorts of different businesses out there, but some will come to us with like a post-it note saying this is my business plan. And then others will come and have done some really good thinking around what are the risks, what are the opportunities, where do they see their focus being, and how they're going to maximize those opportunities to have a really successful business, and what cost base they will have as a result of that. And you're sort of comparing these two, this post-it note versus this well thought through plan that's up to date, and you're kind of going, well, I'm always going to back the business that has this well thought through plan rather than the one that has this post-it note. But what I would say is it's often to get to that plan. It's often useful to talk with the bank early to understand the kind of things that they've seen successful businesses use to get them there. My philosophy is don't be afraid. I think people think they should only speak to the bank when they need something like a home loan or a business loan or a credit card. But I always think if the banks are there also to help you be successful with your business or successful, for saving for a home loan or whatever. So it's really important that you think of them as a useful resource and almost like a partner rather than just at a point in time. So, I don't necessarily think that you need to have a permanent relationship manager to do that. I think, like if you rang up our contact center and said, look, I'm a small business operator. I'm thinking about the future. This is my situation. What would you suggest? How would you suggest I set myself up for success? They would be able to point you in a direction. I think that would be helpful. They won't be able to answer all your questions, obviously, because they're not a business advisor, but they will be able to help you. So the more you can have, those kind of conversations will be helpful. And then, as I said earlier, if you get into strife, feel like you're going to get into strife, then or things are starting to slow down a bit and you're starting to get worried, have a conversation earlier rather than later, because you'll be able to set yourself up better. It's a much harder conversation when you're in when you're further down the pipe and things have gone into the red than it is maybe if you're seeing the order book, your forward order book dropping down a little bit, but you're still okay.
Cash flow is king, right? Cash flow is the big thing, and it's the thing that in our industry, it's what it becomes unstuck, and it's delayed payments and things like that.
Yeah.
You guys are working with our customer. You're financing them their home loan for the build, or right back, and architects really get stuck because they put a lot of work in right up front, and then they can really get kind of hung to dry. But what can we be doing? Can we be approaching our client's bank and starting conversations on that front and getting communication, or is there
you can't do it? Or? Yeah, you can't do it yourself because obviously, you could do it depending on how open the client would be to that. You could do it with the client as a working alongside them and have the conversation. I think it's a double-edged sword, isn't it? Because as a client, you then trying to work through, well, who am I taking advice from? Am I taking advice from the builder or the bank, and it starts to get a bit murky. But I think as I was talking about earlier, each bank will have in the residential property sector. Each banks will have helpful guides around what their specific process is for lending through like a home like a construction build, and at what point do you need to then make sure you're lined up really well to get the next release of funds or drawdowns? So and that'll differ per bank. So it is important that you help educate the customers up front to make sure that they're aware of that stuff. Because I think, as I said earlier, we still see instances where that the customers will get into strife because they just won't almost help themselves a little bit around understanding that. And what we've done recently at ANZ is we've recognised that this is a real pain point, and so we've trained up a whole lot of staff across the country to be construction coaches. And they're trained around the specific process around large renovations and construction builds, just so that they can help customers through this process and hold their hands a little bit more. Because I don't think we're doing a good enough job of it in the past. So we've really, and to that point, we've introduced a whole lot of booklets and stuff like that can help customers go through that process and really explain it in plain English. Because I think, and I've experienced it myself. I just don't think it's an easy process that banks have made for customers over time. So,
and I wonder, build processes are they change and timelines change, and there's stuff changes on site, but the rules around releasing that money can be very strict and stringent. There's a question here. Yeah, my understanding is the deal the government did with the banks, relaxing the proposed capital retention increase, was that the banks would take a different view with regards to supporting small businesses. So how have you guys done that?
Yeah, so with I think it was probably the question there is around, we've heard a lot in the press around the business finance guarantee scheme. So we've got a responsibility with that scheme and also outside of that scheme to make sure that we're lending to customers, whether it's personal customers or business customers, that they can pay it back. So what we don't want to do is lend to customers and have a situation where we put them in a worse position because they can't afford the loan. Mm-hmm. So it's a bit of a double-edged sword. We're really trying to do our part as much as we can, but then also we don't want to get in a situation where a customer has swallowed too much and then can't pay it back, because it's an even worse situation for the customer. So,
do you think that we're in a position where the banks are probably more hesitant than the businesses at the moment?
In certain areas, potentially. I think it's the challenge you've got is, or challenge we've got as an economy, is just making sure that whatever we invest in, and as a bank, we've got to make sure that when we lend money out, that who we're lending it to has a decent plan in place. We can see there's a forward projection of how it will work. Even the property deals that may have worked pre-COVID, now post-COVID, if you're, as I said earlier, there's a lot of customers, a lot of New Zealanders across the country that have had 20% pay cuts, 50% pay cuts. So what may have stacked up previously and made a lot of sense doesn't necessarily make sense anymore. So I think we're definitely open for business, but I think also what we don't want to do is have a whole lot of New Zealanders fall over because we're letting them money that they can't afford. That'd be an even worse situation for New Zealand.
Yeah.
The other thing I haven't mentioned is, and it probably talks to the conversation earlier, was around there is a lot of, and I heard it on the radio this morning as well. There's a lot of talk about how we can come back out and use this post-COVID investment as an opportunity to make things greener and to invest potentially in more sustainable buildings, for example, or projects that are green projects. So to that point, we've already had an interest-free installation loan offer for customers as well, and we've also got a Homestar 6. If you get a Homestar 6 rating or above, then you get a significant discount off your lending. And I think I think Westpac has something similar to that, certainly in the installation space, and I'm not sure about the other banks, but it's worthwhile, I guess, people in this industry understanding that stuff, so when they're dealing with customers, that they can suggest that kind of things as well. And obviously all banks will have different offerings, because I think that's a really good opportunity for New Zealand as well to, if customers are doing stuff in the space and investing in the space, it's obviously it'd be great if we could be improving the housing stock as well.
Okay, one last question, and I'll just make it a double. Where have you seen businesses come unstuck in the past, and what opportunities are you seeing kind of pop up out there or sniffing out from what you're seeing, if any?
Yeah. So coming unstuck is just having a really good plan, and also I guess not putting your head in the sand. Often what we see is that the plan might have been really good, but the environment changes, and if you stick
following it,
if you stick to the same plan, well, that the world's changed, right? The world's moved on. Particularly if you look at commercial property at the moment, as I said earlier, some of the deals that may have stacked up pre-COVID now may not stack up post-COVID because of the demand for inner city workers that may be soft for a while. So we're definitely making sure they've done their homework. When we speak to small businesses, and this hopefully sort of resonates. You mentioned it earlier. One is cash flow, and having a really good grip of that, and understanding when things are going out and when things are coming in. It's really important. But then also getting good staff. Pre-COVID, one of the biggest issues we had in this, I guess, in the construction space, but also across the a lot of other small business areas. I remember speaking to a small business customer on the shore, and he said, "Look, as in the construction industry," and he said, "I said, what are your biggest issues?" And he said, "Well, my main issue is just getting." And I said, "Was it staff?" And he said, "Well, it's not just getting good staff; it's just getting any staff."
Yeah.
So, there may be an opportunity now for that, and that may have changed a little bit. I'm not sure, but certainly to making sure that they have a good plan, they have they have good, reliable staff is obviously important, and then also they don't put their head in the sand when things change. And it's really important. Opportunity-wise, as I said earlier, it's interesting. Like we're still seeing strength in the market, right? So we're still seeing good really strong residential property sales. And this is going into a time when traditionally, we're going into winter, right? So traditionally the sales will be pretty low. So the forward looks a bit weaker, but who knows? The thing I guess I can't say individually what the opportunities are because the things that we'll see at a local level, it's more the deal rather than an industry opportunity, for example. Yeah. And so there might be opportunities for people to pick up things that may be distressed assets or maybe deals that make sense because if you can get it at the right level, then the yield's really strong. Yeah. But yeah, I think the good thing at the moment is that interest rates are so low. So when you're trying to run the numbers, you're running the numbers against a borrowing rate that is at a record low. Yeah. So that often helps as well in terms of getting the deal over the line.
How I think you're always going to have a buffer, but if you're approaching something and that's what your funding rate is now, you are also in the back of your mind thinking if and when this may go up, and does it still stack? Yeah. So my question would be, in the bank's view, how long are you guys approaching? In your thoughts around how long are these low before you see rates increase again? What are you kind of banking on that front?
I'm not an economist, but I think our economists are expecting the interest rates to stay low for quite a while. I think it wasn't that long ago that, I remember I took out I think it was like 10 years ago, I took out my first home loan and was up around 9 or 10%. Now we're talking record lows at, we've got a 1 year rate of 2.65. So yeah, I think it'll be low for a while. You've got the Reserve Bank even asking banks to make sure they're prepared for if there is ever a future where there's negative interest rates. So there's I expect it to stay low for a while. And part of it's also the fact that I talked about earlier about the fact that there's the global economy doesn't look strong. We're an export-led economy. Obviously, we've got good exports that they're more in the robust areas like milk and stuff like that people need, as opposed to the more discretionary stuff. So that's helpful for us. So I think interest rates, to answer your question quickly, I think interest rates will stay low for a while. Yeah. And so when we're looking at assessing deals, we would assess. We used to assess deals at a higher interest rate. We assess them at a lower interest rate, where you still put a really decent buffer on it.
Yeah.
for the very fact that you want people to be able to pay them back.
So what sort of buffer, so we know what we're thinking, what we can apply for, what sort of buffer are you guys using at the moment?
Oh, we're close to around 7%.
Right.
Yeah. So
On top of the interest rate or total?
no, total.
Yeah.
But that's that'll I can't give you the exact number, but it's like it's we have a decent buffer in there to make sure that people.
Yeah, but if you're going into the bank with in mind thinking that even at 5% it still stacks, that's probably not going to be enough in your view.
Yeah. And I'm talking about it'll depend on the different projects, but I'm talking that's a home lending rate, for example. But it'll depend on the different types of lending. But yeah.
Okay, awesome. Well, I think we've taken more of your time than you expected, and I think you were supposed to be at a meeting 20 minutes ago.
Yeah. My EA's just knocking on the window, looking at me.
Okay.
I really appreciate. She's done it twice now, and I've just ignored her. So I'll be in the bad books.
There you go. I appreciate your time, and yeah, all the best, and
pleasure. Again. Keep up the good work.
Cheers.
Cheers.
Good stuff. Catch up.
See ya.